Hey there, I think this video will be incredibly useful if you are trading the stock market, so SP500 and the indices, or if you're trading crypto. So crypto has a correlation with the stock market as well. So I am sort of reviewing the TAGO ratio here again. But this time on the SP500 on the weekly time frame, which actually I have never really taken a look at because I thought there was never enough data. But actually with the SP500 there is enough data to go on. Just before we get into it, there are these white reference lines on the indicator 0.2, 0.3, 0.4, and then at each extreme end we have like a green area and a red area. So you can associate those as oversold or overbought. It's not necessarily the case every time. It depends on the time frame. Usually on the daily, if I'm trading Bitcoin, I will associate the red and the green a bit better, maybe on the 4 hour as well. Yeah, it depends how volatile the market is. But what I want to look at is when the market either rejects from this red box, this red area, or when we're actually in that red area, and what happens when we reject from it. So if you don't know much about the TAGO ratio, it's our proprietary indicator, and I'm not going to go too much into it, but what we're looking at is distinct reversals in the indicator, and what that leads to is a large reversal in price. So of course, if we look on the weekly time frame, this maybe our trades are a bit early, maybe our trades are on point, or a bit late. It just depends because we're on the weekly time frame, right? But I just want to see how accurate are we at predicting any down moves. And I just took a quick look for 5 minutes, and it's incredibly surprising. So I've marked a box and a number for each move. But what I want to start at is I want to start at the first move I've marked down. It's only a few moves, but we're looking back towards 2018, so about 7 years worth of moves. Okay, so 2018, we went up to this red zone. We flew in. We had lots of volatility coming in. And then what happened was we got a massive spike of volatility right here, and then we began to reverse just right there. And then once we got that reversal in the red zone, we started trending downwards very fast. And in the process, we reversed again here. So this would have been another entry. Depends where you want to do it, where this purple line crosses above or not. I would say where the purple line crosses above. So then on that, you would have made an entry about here, give or take. You won't be exact, but let's say you catch a around 5% move. It's not a really big crash. But then what happens is the market actually comes back up for a second time. So actually, this could be seen as some kind of exhaustion pattern, perhaps. So we didn't actually get a crazy crash on the first time, right? It's just, okay, 8%. Not that much. It's maybe for SP500, but yeah. But then the next time when we end up having more of a significant reversal, so we wobble around here, and then we start to reverse. And if we go down to this gradient all the way down here, you can see that we just start reversing more. It's getting unstable, especially after we've had like an upside. You're going to be looking for that reversal. So once that crosses over, I would be looking at shorts from pretty much this whole period here. I would be looking at shorts, and I'd be just sticking with any shorts for probably a month, over a month there, maybe adding to the short every time, which is fine. The market barely moved during that week, those few weeks. So yeah. And then what happened is we got a bigger move down. So the next reversal to the upside was, say here you would close the trade, and that would be about almost 20% move, like 15 to 20% you would catch there. How much did it actually go down? Yeah, we went down like 19%, so you might catch like 17, 15%, which is much bigger, right? It's much crazier. And then afterwards we had the long, how long did this take? Rally, going into 2020, right? And then we had the COVID crash. What's interesting is, okay, we had this COVID market crash, black swan. Could we actually have predicted this in advance? Well, surprisingly, if we use the TAGO ratio on the weekly, we could have seen this reversal happening just below the 0.4, similar to what we just did like a second ago here. We would have started looking for shorts around here. So when we start crossing below with this purple line, and then things are getting a bit messier. Note that on the weekly, you have to be more lenient, more flexible, because things can happen fast, things can happen slow. The SP500 is definitely not as volatile as Bitcoin or anything like that. But it's still, if you're making some trades, they're probably going to be quite high leverage on SP500. And then on the reversal, for that short, we would have gotten out around here, which, as you can see, this bounce had much more volatility. Maybe you want to look on the daily time frame to exit earlier, but it doesn't really matter now. It's fine. So let's say you made an entry on average around here, which is fine. Not sure why that's not letting me measure. Okay. So that would have given you, even crazy, let's say if we actually get out here, right? Because that sounds a bit more realistic. You'd make about 25%, and that's just spot, right? Which is crazy. The market actually dropped about 33%, like a third of its value. And you could have also gone into a long here. So we keep going up, and then the market takes a bit longer to actually come up in terms of the TAGO ratio. So coming back up to the 0.4, that's what we're looking at. What we do is we end up sort of having a consolidation here. It's not really doing much. On the reversals, we want to get as close as possible here to the 0.4. And then what happens is we actually slice through, and then we reverse again here. So then you would place your entry, and then your next exit would be, you'd be looking at like how we react coming back in, because we could come back in, and we end up bottoming out here on this other reference line. So it works really well. And if you were to do that trade, you would probably, let's see, you're getting in around the close of this candle, and then you're coming out. Actually, it doesn't really matter where you come out here, but you're making about 25%. Note that this is over almost like a year, so you're gonna be, in reality, you will be placing more trades and scalping across these weeks. But if you don't want to be into the market that much, then you'll probably be fine of just keeping one trade open or whatever. Or if you're just using this as market direction, which is probably what I would do. I would say for the next year we are down. This is what's happening. You can just mark it down This is what you're looking for. You're looking at this support, and this will reverse the market. And then this is what's happening when we're going into like a bear market or downside. We could probably overlay this with Bitcoin as well. Actually, let's try and do that. Can we do that? Same percentage scale. Okay. Ooh. A little bit weird, but okay, let me try and new pane. Okay, I'll just keep it here. So as you can see, Bitcoin around the same period. Wow, crazy. Okay, maybe your signal was a little bit lower. So after Bitcoin has dropped significantly, it's much more volatile. It's not 100% correlate, right? And then it drops, and then it actually makes its low really low, around 70k. Actually, that was marking the low of all-time low of Bitcoin. And then afterwards, that would be your point to enter as long, or start accumulating, or whatever you want to do in the long term. It doesn't need to be long positions, short positions. You can use accumulation techniques. You can figure out other stuff, you know. And then what we're looking for is we're looking back at the 0.4. So on the weekly, we're keeping it really simple. And actually that happens like almost 2 years later. It takes a long time for the market to recover after that downside volatility. But during this period, Bitcoin is also flying, right? By the time we get our first touch of 0.4, Bitcoin is at 70k or something. This is in March. Maybe we've predicted the Bitcoin crash for last year, the consolidation. Who knows? But I would have entered a short about here, right? Slightly a bit further out, like here. So pretty much when this crosses over, and then what we're getting is this reversal here. Of course, this is hindsight as well, so you have to factor that in. But what we're looking at is we're getting really close to 0.4, so we're looking at the shorts. We're not looking at every little cross of the green and the purple. That's not what we're looking for. We're looking for reversals. And then we would exit out as soon as this crosses above. Which, okay, this is not really a big move. It's like 5% or something, whatever. But then we cross above the 0.4, which is what we need to look for now. So we cross above, and this is another one of those, we're coming back to where we are now, and this is one of those like two-touch, staying in the 0.4 for a long time in the red zone. So what happens is we get a reversal. I'm not gonna draw this one in, but we get a reversal. We go in around here, and then we would exit around this candle. I don't know. You're gonna have to go on a shorter time frame when you're doing this to exit, but you make about 5%, let's say, if you exit around here. And then we start moving up again. This is obviously another long signal. You can take the short, you can take the long, whatever you like. And then we look for a distinct reversal, so it'll be separate. It won't be consolidating like this. We're going to be looking for something higher. I think that's what we got last time as well, right? Back in 2018, something like that. Yeah, so we got a spike higher, a much higher spike going above in terms of the purple line, let's say. But the market was so volatile that it didn't actually have enough time to, let's say, react for 2018 markets at least. In terms of the moving average, sorry. But now what we're getting is we got that other reversal, so distinct reversal around here, which was back in December. Crazy. So we got that, and Okay, we've been sticking around the same area, but now we're starting to break below. This is not scary. You might look at, okay, you've watched 15 minutes of this to wait for this little bit of analysis. But because we're getting the second reversal, I'm expecting a much bigger move down in terms of, okay, possibly Bitcoin, crypto. I'm not going to associate Bitcoin too much with it. I will do my own analysis of that. But the general market is going to be going pretty downwards. That's my general sentiment. This might take place over this whole year. As you can see, lots of the moves we've done have taken several months, taken almost a year to take place, right? And that's what happened with Bitcoin as well. It took almost a year to do that. But what we're doing here is we're taking a shift in sentiment. So we've got this fib level here. If we break below, it's going to just confirm the bias to the downside. And what we're looking for is this trending back down and then like reversing around here again, which is just done several times, right? It just wants to do that. Where we're actually, on this weekly, we're never actually below the 0.3. It's just ranging between these two areas, which is quite nice, actually. Okay, so we've done that. How far could this go? I haven't got too many around here, any levels, but we've already come down about 6%. That's not enough, obviously. We're just about breaking below 15% at least, maybe even 20. We could come down quite a lot. The market is very artificial right now. As you can see, we've just been pumping and pumping and pumping. This is the greatest pump of all time for the SP500. It's just absolutely crazy, right? So yeah, thanks for watching. I hope this has helped you. I hope maybe this has interested you more into the TAGO ratio as well, as much as it's interested me. I wasn't planning this video, but I found this extremely interesting, and I will probably add this to the POC analysis, probably today. And I hope you find it useful.